early November meeting said that ongoing rate hikes would be appropriate. A substantial majority support likely slowing the pace of tightening soon. That really does set up for a 50 basis point rate hike in December. A few participants, notice the qualifier, a few suggested it was better to wait to slow hikes until it was clear that inflation is receding. So that is not where the center of the board appears to be. Members emphasize it's more important to consider the peak rate over the pace of future hikes. In other words, that where the Fed is going is more important than the pace that it gets there. Many participants said the effects of the rate hikes were, quote, still quite uncertain. Some of those people are in favor of either lower rate hikes or slower rate hikes. Many participants said the full extent of policy tightening was, quote, yet to be realized. Risks to the inflation outlook were high, tilted to the upside. Recent inflation data was higher. Remember, this came before the recent November. The meeting was before the recent October inflation report that came out in November. But inflation at that time was said to be more persistent than anticipated. Tentative signs of labor market moving towards better balance. And we've heard some officials talk about seeing some signs of slowing in the labor market. Risk to the economic outlook, however, were weighted to the downside, particularly due to global headwinds from China and the Russia-Ukraine war. And they were seeing softening in consumer and business spending growth, although I have to say we got data this morning that leaned against that idea of business spending slowing. And of course, some important information here on the Treasury market. They saw the function of the Treasury market being orderly, an important assessment, given that they are shrinking their balance sheets. The higher mortgage rates were notably restraining housing activity. One other thing, several participants said tightening global monetary policy could spill over to the U.S., and we heard that from Mary Daly last week, who said that was one of her reasons why she thought there was maybe more tightening out in the economy than is in the actual funds rate, because in part of global tightening as well.